So here we have a list of few adjustments. So we will discuss one by one all these adjustments. So today first we will discuss on outstanding expenses, after that prepaid expenses, accrued income, unearned income, closing stock, interest on capital, interest on drawings, and then we will discuss on provision for doubtful debts. So today I am going to explain you adjustment for outstanding expenses and prepaid expenses. So today we will cover these two adjustments. So see, so here we have journal, and one account I have opened in the ledger salary, and here we have trial balance, then we have income statement, and then we have balance sheet. So first I am going to discuss on the outstanding expenses. So first we should know the meaning of outstanding expenses. What do we mean by outstanding expenses? So see, first we will discuss that. Outstanding expenses. Outstanding expenses are those expenses which are related to the current year but still unpaid. So here I am taking an example. Suppose this is my business B, and in this business I appointed Mr. X as an employee, and his salary will be $2,000 per month. And Mr. X worked for me for the whole year. He worked for a period of 12 months, but I paid him only 11 months salary. 11 months salary I paid 2,000. At the rate of $2,000 I paid him salary for 11 months. 22,000 I paid. So what is the outstanding salary then? Last month's salary is pending. So 22,000 I paid, that is for 11 months, and outstanding salary is how much? 2,000. So though I paid this $22,000, so it means I passed the entry for this. So see the entry for this paid salary. 22,000 I paid. So what entry I have passed in the journal? See, salaries expense. So salary account debited and cash account credited. And I paid 22,000, so I passed this entry. So this is the entry for the salary paid by me. I paid, this is 11 months salary, and I paid, and this is the entry for that. Salaries expense, that's why debited, and we paid, so cash decreased. So and cash is our asset, and decrease in asset means credit. We will credit the cash account. So this is the entry for salary paid by me. Now see, after passing this entry, see what we will do in the ledger, in the salary account, we will make the posting. Now salary debited, so on its debit side I will write the name of the opposite account, and I will put amount on the debit side, 22,000. Now see, salary account is showing debit balance, isn't it? So that debit balance will appear in the trial balance. So salary showing debit balance 22,000. So this is how salary will appear in the trial balance. So I recorded journal entry in the journal, then ledger posting I have done in the salary account, and now in the trial balance I have shown the salary account at 22,000. Now after trial balance, what we do, we prepare the income statement at the end of the year. And salary is expense, so salary will come in the profit and loss account under head expense. Okay, but P&L account will accept only figure of 12 months. So see here, salary, this is salary in the trial balance is there. In the trial balance salary is there, isn't it? But its figure is only related to 11 months. So profit and loss account will not accept that figure. So what we need to do, I will show salary 22,000 in the inner column, and this 22,000 P&L will not accept because this figure is only related to 11 months. P&L will accept only figure of 12 months. So what we need to do now, we need to pass adjustment entry for this 2,000. This is the outstanding salary, last month salary, which is not paid by me. So for this now I need to pass the adjustment entry. If I will not pass the entry, then what will happen? P&L account will not accept this figure 22,000. So that's why I need to record this 2000. This is last month's salary and which is not paid by me. So I need to pass the adjustment entry. So see what adjustment entry I will pass. So see, this 2000 is salary for the last month. So see what I will do. So this is the salary. So to record the salary I need to debit the salary account. Salary account will be debited with how much amount? 2000. And though it is not paid, so I can't write here cash. See, here I wrote here cash 22,000. Why I wrote cash? Because I paid this 22,000. But here I can't write cash, because this 2000 is still pending. So I need to write in place of cash. What I will do? I will write outstanding salary. Outstanding salary. Outstanding salary account. How much amount? 2000. $2,000. So this is outstanding salary account. I will write in place of cash account. And this outstanding salary is actually representing Mr. X, the employee. Mr. X is my employee, and outstanding salary account is representing Mr. X account, because there is an obligation of Mr. X on the business, because he worked for the business, and but still salary is pending. There is a liability on the business to pay Mr. X. So that's why, and it means the liability increase in the business. So that liability now I have to consider. An increase in liability means credit the liability. So rather, writing Mr. X personal account, what I wrote here, I have taken a representative account, outstanding salary. So this account is representing to all those employees whose salary is outstanding. In my example, Mr. X's salary is pending. So I wrote here, I can't write Mr. X. I have to take, a representative account. And here, what is the name of that representative account? Outstanding salary. This is a, Mr. X personal account actually, and this is liability on the business. So salary debited because it is expense, and as this salary is not paid, so that's why I need to create the liability. And for that, what I will do? I will credit this account, outstanding salary. This is the liability. So this is the adjustment entry. This is adjustment entry. Adjustment entry for outstanding expenses. Now after passing this adjustment entry, see, now we need to show the impact of this entry. So see, salary here debited, isn't it? Salary is expense, and expense is debited. Expense account is debited, isn't it? So what will happen? Expense will increase, because whenever there is increase in expense, we debit the expense account. So here I debited the expenses account. It means we need to increase the expense. So here I will write that 2000. Add outstanding salary. Outstanding salary. And how much amount I will write? 2000. And now in the P&L account, how much salary should I show? 24,000. This salary 22,000 is what? Salary as per trial balance. And this 2000 is effect of what? Effect of this entry. In this entry, salary account debited. It means the salary is increasing. Increase in expense debit. So salary account is debited. It means I need to increase the expense. So I increase the salary with $2,000. And after increasing the salary account, now the amount of salary account is how much? 24,000. Now P&L will accept this figure, as this figure is related to the 12 months, not 11 months. So I have shown the effect of this account. Now this effect of this I have shown, this debit item. Now I need to show the effect of this. See, each adjustment entry will have two effects. So first effect I have shown, effect of this debit. Now I have to show the effect of this credit. And which account is credited? Outstanding salary account. And it is liability. So it will come in the balance sheet. In the balance sheet under head current liability. So under head current liability I have to show this. Outstanding salary. And how much amount? 2000.